Hello, welcome back. I'm called Jingonelli and I'm going to be taking you through another part of partnership. But before I begin off, I'm going to require you to subscribe and also follow what I'm pointing at for you to be able to follow up properly. Now with this, I'm going to require you to also follow all my videos that I'm going to make starting at least from this point. Make sure you watch the full video from the start to the end for you to be able to understand the dissolution of partnership. Now with this, just a quick review, point to note here, previously in the previous video we had revaluation. So with revaluation account, the partnership is closed to know the worth of assets and then continue with the partnership business. So whenever you're having a question asking about revaluation, they are to close off the partnership and then continue with the partnership business, maybe probably after admission of a new partner. Then with the realization account, which we are going to look at, the partnership is closed when the business is not continuing as a partnership business. So that is with realization. So looking at the dissolution of partnership and conversion of partnership business into a limited liability company is what we are going to look at today. And we are going to start off with the dissolution of partnership. So with this, a partnership may be dissolved after some time because of the following circumstances. One, when the partnership is no longer making profits, by mutual agreement whereby one or more of the partners reaches retirement, or if the contract expires, where the partnership has expired to the extent that there is need for it to be converted into a limited liability company by force of circumstances. For instance, when a partner dies or if the government intervenes, then disagreement among partners. Moving on dissolution of a partnership, the partnership may be sold as a going concern, may be converted into a limited liability company, or the business may completely come to an end. Then a realization account is opened to record all the assets of the partnership on dissolution. The respective asset accounts are closed and debited to the realization account. As the partnership is being dissolved, dissolution expenses may also be incurred and thus debited to the realization account. We are going to look at all these. In case the partnership had any liabilities on dissolution, individual partners must pay for those liabilities. The partners' capital and current account must all balance with no closing balances since the business has come to an end. So moving on, so then we are going to be looking at the accounting entries for dissolution. So once you have mastered all these accounting entries for dissolution, trust me, you can handle any number on dissolution. So with this, I'm going to begin with the first one. So number one, on dissolution, realization account is opened and all assets except cash and bank balances are closed or debited. Corresponding credit entries are made in the respective asset accounts, meaning that you're going to first of all close off these partnership accounts here with the realization account. So the entry will be, you're going to debit the realization account and credit the individual assets account. So moving on to 2, in case of any provision, close the provision account by debiting the provision and then you credit the realization account. So here it's like, remember the provision is like a liability. So for you to reduce a liability which is going to be on the credit side, so you reduce a credit side by debiting, by passing a debit side. So that's why I'm going to be passing a debit side on provision so that it can reduce the one on the on the credit side previously. You get here. So that is this with this double entry here. Then again, for any reduction in the value of assets, for example, discount allowed. So remember, once I want to reduce an asset, remember an asset is having a normal debit balance. So when it's having a normal debit balance, meaning if I want to reduce it, I'm going to pass a credit. So I'm going to pass a credit. I'm going to pass a credit whereby I'm going to come to the credit side and I say individual asset account, and then I debit it with the realization account. So looking at 4, for this, for any reduction in the value of liabilities, for example, discount received, remember a liability is having a normal credit balance brought forward. So if I want to reduce this credit, I'm going to pass a debit. That's what I've done here. I'm going to debit it with the individual liability account, and then I credit it with the realization account. So that is it. That is that with this accounting entry. So for accounting entry number 5, it's saying in case partnership assets are taken over by the partners, what happens? I'm going to debit my individual partner's capital account in order to reduce the partner's capital account. And remember, the assets are already realized and have already passed the debit of the realization and the credit of the individual assets. I'm just going to come and I reduce another account, which is called the realization account, with the agreed takeover price. So that is to do with this for this accounting entry. Then in case of external liabilities settled when sufficient cash is available. So for this, I'm going to remember, if I told I want to reduce the liability, I'm going to pass a debit. So I'm going to pass a debit of the individual liability account in order to reduce it, because previously it's having a normal credit balance. And then I'm going to credit my cash or bank account, because I'm to clear off this external liability with the sufficient cash which is available. I will credit with the bank or cash account with the actual amount being paid. So moving on, in case liabilities are taken over by the partners, still here, remember I want to reduce liability, and it's the partners that are taking this liability. So here it's going to be like the partner is the giver, is the one who's going to give the amount to pay off this liability, and it's the individual liability account which is going to receive this amount. So I'm going to debit the individual liability account, and I credit the individual partners capital account. So here, in case assets are sold for cash, so here when they're sold for cash, cash is going to be increasing, meaning it's my asset. I'm going to debit the bank or cash account, and then I credit my my realization account. Then in case of dissolution expenses, here I have to pay off the expenses, meaning that my cash or bank is going to reduce, and an asset, but cash or bank is an asset, my cash or bank is going to reduce by passing a credit. So credit cash bank or cash account, and then I debit it with the realization account. So that is that with that transaction. I want you to note these numbers. This was 8, 9, then 10. The realization account is balanced off to determine the profit or loss on realization in case the debit side is greater than the credit side. This is loss on realization. If the credit side is greater than the debit side, this indicates a profit on realization. So once I get to draw my T account of the realization account, I realize this side is more and this side is less, so this will be a loss on realization to make this side balance. And with this T account of my realization account, if this side is more and this side is less, to make this side balance off, this will be my profit on realization. So therefore, the profit or loss ascertained is to be shared amongst the partners using the agreed ratio. So here, in case of a loss in realization, I'm going to debit my individual partner's capital or current accounts, and then I credit my realization account. in case of profit on realization, I'm going to debit the realization account, and then I credit my individual partners capital or current accounts. So for accounting entry 11, transferring the partners account current account balances to their capital accounts. So here, in case of credit balance on the current account, I'm going to debit the partners current account, and then I credit my partners capital account. So this is what is going to happen if I'm having my current account and it's having a credit balance. I'm assuming like this, meaning this credit balance is, if I told I want to on the credit account, it's going to go in its what, debit side. Debit side meaning debit the partners current account, and on the capital account, the partners capital account is just going to go on the credit side, the same as this side here. So it will just go to the credit side, meaning I've debited my current account and credited my partners account, partners capital account. Then in case of a debit balance on the current account, I'm going to debit my partners capital account, and then I credit my partners current account, meaning if I'm having a debit balance on this current account, if I told them to do another current account, this will just go the opposite way, which is the credit side, and this will remain on this same side to the capital account. So this is with this, so this balance will go on this side of the capital account, and this side will go on this opposite side of the current account, meaning I'll debit my capital account and then I credit my partner's current account. So accounting entry number 12, where any partner has a debit balance on his or her account, such a partner must pay an additional amount to the firm's bank account so as to clear his or her debit balance. So this is this can be seen in case of insolvent partners, whereby you have to debit the cash or bank account and then you credit the partner's capital account. So accounting entry number 13, in case of partners having credit balances on their capital accounts, there must be sufficient funds on their partnership account to clear those credit balances. So here I'm going to debit the partner's capital account and credit the bank or cash account. So after all the above transactions, the bank or cash account will self-balance, and it will just automatically balance and you'll be right. So thank you so much for watching. Make sure you subscribe and you follow up the next video.